This wasn't just a house. It was 40 years of memories, built brick by brick on a quiet suburban street. Every Sunday, she'd place fresh roses in a vase on the kitchen table, a ritual her husband Robert had started. She had no idea that one day she'd be forced to leave a fresh bouquet behind to wilt in an empty room. The house held the history of her life. The pencil-marked door frame in the kitchen tracked kids who were now grown with kids of their own. The faint, sweet smell of the rose bushes they'd planted instead of a honeymoon still clung to the summer air. But now, another sound was breaking the silence. The dull thud of a foreclosure notice being plastered to the front door, its edges fluttering in the breeze. This house was meant to be her fortress of security. She had no idea it would become her prison. She believed her signature on a stack of papers guaranteed her peace. The pen glided across the page, her signature bold and hopeful, a promise, she thought, of dignity in her golden years. But hidden in the dense forest of fine print, a devastating secret was waiting. A clause that would turn her American dream into a foreclosure nightmare. It started with a simple, alluring promise, whispered from the flickering light of a TV commercial into her living room late one night. Unlock the equity in your home. Live your retirement worry-free, no monthly payments. For Eleanor, a widow on a fixed income, watching her savings dwindle with every rising bill, these words weren't just a sales pitch, they were a lifeline. A reverse mortgage. It sounded like the perfect solution. A way to stay in the home she loved, the home she'd shared with her late husband, Robert, without being a financial burden on her children. That signature felt like an exhale, a release of worry. But the relief was a mirage. The paper she signed wasn't a lifeline, it was an anchor, and the tide was already turning. To understand how this nightmare unfolded, you first have to understand Eleanor. She wasn't reckless. She was from a generation that valued prudence and trust. Years ago, she remembered watching a news report about a financial scam targeting seniors and scoffing. "That would never be me," she'd said to Robert, adjusting the photo of their wedding day on the mantelpiece. "I'm too careful." The memory haunted her now. She and Robert bought their 3-bedroom home in the late 1970s. They couldn't afford a honeymoon, so they planted rose bushes in the front yard instead, a living promise to each other. They stretched every dollar, paid their mortgage on time for 30 years, and celebrated with a quiet dinner the day they made that final payment. The house wasn't just an asset. It was the physical proof of their life's work. After Robert passed away 5 years ago, the house became both a comfort and a source of quiet anxiety. She'd hear the phantom shuffle of his slippers on the hardwood in the morning. She'd sit at the kitchen table, her fingers tracing the worn-out spot where his coffee mug sat every single day, a little circle of fading varnish that symbolized everything else that was slipping away. She'd walk past the cracked driveway and remember a sweltering August afternoon when Robert, refusing to hire help, fixed it himself with his bare hands, sweat on his brow and a proud smile on his face. The silence was tough, but so was the creeping realization that her pension and Social Security, once enough for two, were barely enough for one. The roof Robert had always patched himself was starting to show its age. The property taxes seemed to climb every single year, an unstoppable force against her fixed income. Her daughter Sarah lived 2 states away, busy with her own life. Eleanor cherished their weekly calls, but was fiercely independent. The last thing she ever wanted was to be a burden. "I'm fine, honey. Everything's just fine," she'd say, changing the subject whenever Sarah asked about money. But she wasn't fine. Her hand trembled as she wrote checks from a dwindling account. She was cutting back on groceries, keeping the heat uncomfortably low in the winter, and putting off a trip to the dentist. Selling the house was unthinkable. Where would she even go? A sterile senior living facility? This house held the echo of Robert's laughter. It's where she'd taught Sarah to ride a bike, and where she'd hung laundry in the backyard on a clothesline for 40 summers. Leaving felt like a betrayal of the life they'd built. So when those reverse mortgage commercials started popping up, the message felt like it was made just for her. The smiling actors spoke of freedom, of accessing the cash she'd earned. The promise was clear. You've done the hard work. Now, let your home take care of you. It felt like a solution that would let her stay. What she didn't realize was that the man who made that promise would soon be a ghost in a system designed to confuse her. Eleanor wasn't impulsive. She did what she thought was responsible research. She called the number on the screen and was connected with a loan officer named Mr. Davis. He was patient and kind. His voice was like warm honey, and he didn't sound like a salesman. He sounded like a guide. "Eleanor," he'd said in that calming tone, "you've worked your whole life for this home. It's time it started working for you. A reverse mortgage, specifically a home equity conversion mortgage, or HECM, is a government-insured loan that allows you to access that equity. Think of it as an advance on your home's value." He explained the core appeal. She'd get a lump sum, enough to fix the roof, pad her savings, and just give her some breathing room. And the best part, he emphasized, no monthly mortgage payments. The loan would only be due when she permanently left the home or passed away. It sounded flawless. Sarah, her daughter, was hesitant. "Mom, are you sure? It sounds complicated. Maybe I should come down and we can talk to a financial advisor." But Eleanor, feeling a surge of her old independence, pushed back. "Honey, I've got this. Mr. Davis was so clear, and it's insured by the FHA. It's perfectly safe. Besides, I have to go to a counseling session before I can even apply. It's required." And she did. Eleanor sat through a mandatory counseling session with a HUD-approved counselor. The session was over the phone and lasted about an hour. The counselor went through a checklist, but a lot of the language was technical. Words like non-recourse feature and accruing interest were explained, but next to the giant promise of no monthly payments, they just seemed like minor details. She got a certificate in the mail a few days later. With the certificate in hand, things moved quickly. A notary came to her kitchen table. Eleanor sat with her reading glasses on, a cup of tea growing cold beside her as she looked over the massive packet of papers. Her eyes lingered for a moment on a tiny, unread footnote at the bottom of a page, a dense block of text that seemed unimportant, before she turned to the next. The stack was intimidating, but Mr. Davis had been so trustworthy. She saw the lump sum payment and imagined the peace of mind it would buy. She picked up the pen and signed her name. She thought the hard part was over. It hadn't even begun. She wouldn't hear from Mr. Davis again, not until it was already too late. What she didn't see, what wasn't explained in a way that cut through the legal jargon, was a devastatingly simple clause. The contract said that while she had no monthly loan payments, she was still responsible for paying all property taxes, all homeowners insurance, and all maintenance costs. Failure to meet any of those obligations would be a loan default. Mr. Davis had mentioned it, but only in passing. Of course, you'll still handle your own taxes and insurance, just like you always have, he'd said breezily. To Eleanor, that didn't sound like a warning. She didn't grasp the critical difference. Before, failing to pay was a problem between her and the county. Now, it would be a problem between her and a lender that held the deed to her life's work. For the first 2 years, everything was fine. She had the roof replaced and even took a small trip to visit Sarah and the grandkids. The anxiety that had been her constant companion finally loosened its grip. The disaster began with a piece of mail she almost threw away. Her homeowner's insurance premium was going up. A lot. A few months later, the property tax bill arrived. It had also gone up. She paid both from her reverse mortgage funds, but her savings account dipped with a familiar pang of anxiety. The real crisis began the next year. Eleanor, now in her late 70s, had a bad fall and broke her hip. The hospital stay was a blur, but the month that followed in a sterile, lonely rehab facility was worse. At night, the darkness was filled with the beeping of machines and a profound loneliness. As she lay there, smoothing the wrinkles out of the thin bedspread with a trembling hand, she flashed back to their first anniversary. Robert had led her out to the front yard with her eyes closed, and there they were, 2 tiny rose bushes. He couldn't afford jewelry, he'd told her, but he wanted to give her something that would grow with their love. The memory was so warm, so vivid, it made the cold reality of the rehab room unbearable. The humiliation of needing a stranger's help just to get out of bed was crushing. She would stare at her dinner tray, a small plate of bland food, and a jolt of dread would hit her. Did I pay the insurance bill? Is there mail piling up? She'd drift off and dream she was back in her own kitchen, the smell of chocolate chip cookies in the air, a younger Sarah laughing beside her. Then she would wake up with tears on her cheeks, disoriented and surrounded by strangers. Panicked about the mail, she finally had Sarah overnight the pile. There it was, the cancellation warning for her homeowner's insurance, a week past due. She called her old insurance agent, a man she'd known for years. His voice was full of pity. "I'm sorry, Eleanor," he said gently. "Your policy has lapsed. There's nothing we can do." She felt a cold, sinking feeling. The first of many systems she'd trusted her whole life was abandoning her. Scrambling, she got a different letter. This one was from her reverse mortgage servicer. It said she had failed to maintain insurance. Therefore, the servicer had purchased a force-placed policy for her. The premium was nearly 3 times what her old policy had cost, and the cost had been added to her loan balance. She called the servicer, met with a wall of automated menus. When she finally reached a person, their response was scripted and cold. Things spiraled. Distracted by the insurance, she was late on a property tax payment. The servicer immediately paid it and once again added the amount plus fees to her loan balance. A few weeks later came a letter citing deferred maintenance and imposing a fee because an inspection had noted the cracked driveway, the same one Robert had fixed with his own 2 hands. Her loan, which wasn't supposed to have payments, was now growing at an alarming rate. The final blow came in a certified letter, a notice of default. It said that due to the insurance lapse and delinquent taxes, the entire loan balance was now due and payable immediately. The number was staggering. 2 months later, the foreclosure notice was taped to her front door. Eleanor's story is a textbook example of how a financial tool for security can become a weapon. Let's break down the critical failure points. First, the misunderstanding of no monthly payments. This is the most seductive and dangerous phrase in reverse mortgage marketing. You don't make monthly principal and interest payments, but the loan doesn't eliminate financial obligations, it just shifts them. You absolutely must pay property taxes, maintain homeowners insurance, and maintain the property. Failing at any of these is a default. Contrast Eleanor's story with another borrower, Maria. Maria's daughter insisted on being on the counseling call. She asked pointed questions. When the loan officer glossed over the tax obligations, she pressed him. What happens if the insurance doubles? What is the exact process for a default? Afterwards, Maria and her daughter created a dedicated binder with all the documents, set calendar reminders for tax deadlines, and even started a shared Google Doc to track correspondence. That simple act of proactive empowerment saved Maria from a nearly identical trap just 2 years later when her own insurance rate spiked. She was prepared because she understood the real risks. Second, the snowballing debt. A reverse mortgage is a negative amortization loan. Instead of the balance going down, it goes up. Every month, interest is added to the principal. For Eleanor, it was worse. When the servicer force-placed that expensive insurance policy, that cost was tacked onto her loan balance. When they paid her property taxes, that amount, plus fees, was added too. Her debt snowball was turning into an avalanche, consuming all the remaining equity in her home. This is critical for heirs too. They might inherit a home with a debt that equals or exceeds its market value. Third, the flawed safeguards and servicing nightmare. But what about the mandatory HUD counseling? Wasn't that supposed to prevent this? In theory, yes. But a 1-hour phone call tasked with explaining a product this complex, with a current lending limit for 2025 as high as $1,209,750, can be overwhelming. As Eleanor might say now, I thought counseling meant someone would explain it all to me. I didn't know I had to be the expert. Once the loan is signed, you're handed off to a massive loan servicer. This is where many nightmares begin. Recent actions by the CFPB in 2024 highlight how some servicers were inadequately staffed, leading to homeowners being unable to get help. For Eleanor, needing help meant hitting a brick wall. Tragically, she also missed out on newer protections introduced in 2025. These include more flexible repayment plans and extensions for at-risk borrowers over 80 with health issues, safeguards that might have given her a chance to recover. Eleanor's story is a warning, but foreclosure is not inevitable. Here's how you can protect yourself. Lesson 1. Treat the HUD counseling session like a final exam. This is your most powerful line of defense. Before the session, demand the information packet. Go through it with a fine-tooth comb. Write down every single question you have. Insist on having a trusted family member or financial advisor in the meeting. Make them explain a worst-case scenario. If my taxes and insurance go up by 20% in 5 years, what happens? Lesson 2. Scrutinize the T&I obligation. Taxes and insurance should be your mantra. Create a long-term budget. Research historical property tax increases in your area. Add a significant buffer for surprises. Ask the lender about a life expectancy set-aside, or LESA. This account uses some of the loan money to let the servicer pay your taxes and insurance for you. It reduces your cash payout, but it can be a lifesaver. Lesson 3. Plan for the what-ifs and talk to your heirs. A reverse mortgage affects the whole family. Have an honest conversation with your children. Explain that you're considering this loan and that it will reduce their inheritance. Give them copies of the documents. If a spouse is not on the loan as a co-borrower, the risks are even higher. While reforms have provided more protections for non-borrowing spouses, this has to be discussed in detail with your counselor. Knowledge is your best defense. Think about a viewer named Brenda who wrote to us. She was days away from having her mother sign similar papers when she saw a video just like this one. She learned to ask the right questions and they walked away. As Eleanor would say now, if I could go back, I'd ask more questions. I'd wait. I'd read every word twice. A warning from one grandmother to another. Sharing this video isn't just a click. It can be a lifeline. If you found this video valuable, please subscribe and share it. Someone in your life is vulnerable right now. Send them this video. You might be the only thing standing between them and financial ruin. We've created a free downloadable guide with a checklist of critical questions to ask. You can download it at the link in the description. Conclusion. In the end, Eleanor lost her house. In the final weeks, she walked through each room, saying goodbye. She ran her hand over the pencil marks in the kitchen. In their bedroom, she stood for a long time, the air still faintly smelling of Robert's cologne. "I tried to keep it for us," she whispered to his memory. The last thing she did was walk to the mantelpiece and gently pack the framed photo of their wedding day. She locked the front door for the last time and didn't look back. Selling the home was the only way to satisfy the loan. After the massive loan balance and all the fees were paid, almost nothing was left. 40 years of memories and a lifetime of equity. Gone. Months later, Eleanor and Sarah stood in a cold, concrete storage unit. Mom always said she was fine, Sarah thought, the guilt of familiar, lingering ache. I believed her. I needed to believe her. Sarah opened a box and pulled out a lopsided clay pencil holder she'd made in 2nd grade. "Oh my," Eleanor said, her voice catching. "You made this for Father's Day. He kept it on his desk until the day he died." She then looked at the wedding photo Sarah was holding. "This used to hang above the fireplace." Eleanor didn't lose her home because she was reckless. She lost it because she trusted someone she thought was safe, and she wasn't the only one. Eleanor now lives in a small apartment. Sarah visited last Tuesday, bringing groceries and a new orchid for the windowsill. They sat in matching armchairs, Eleanor's much newer than her old one. "I was thinking," Sarah said softly, "we could do dinner every week. My place or yours? And maybe we could look at places a little closer to me." Eleanor reached out and squeezed her daughter's hand, a small moment of reconnection. At night, she still speaks to the photo of Robert on her end table. "I thought I was doing the right thing, love," she says. "I just wanted to stay a little longer." Her story is a tragedy, not of a single evil act, but of a system where a fine print obligation carries the weight of financial ruin. A home is more than an asset. A reverse mortgage is more than a loan. It is a life-altering commitment. Question every promise. Never let the allure of quick cash blind you to the reality of long-term risk. Because your signature, which can feel like a key to freedom, can also be the thing that locks the door behind you forever. If this could happen to Eleanor, imagine what happens when love gets weaponized. A 10-second clip plays, a blurred photo of an older man, an email notification sound. The text of a blurred email message appears. "I'll love you forever. Just need a little help." A different, ominous voiceover begins. Voiceover. She said she loved him. He said he'd take care of her. But what he really wanted was her bank account. Watch this next for another gripping tale of retirement gone wrong, plus the lesson you can't afford to miss.